Welcome to our Hong Kong brief. I'm your host Jenny. Today, we're diving into some exciting news from the financial world. First up, Chinese Keepwell bonds, which have been a staple for offshore investors, are shrinking fast. A recent court ruling clarified some damages but left many questions about their effectiveness, leading to a sharp drop in issuance from $30 billion in 2017 to just $7 billion today. Experts warn that future bonds will mainly come from state-owned firms, and legal uncertainties still cast a shadow. Next, trade tensions between the US and China are impacting energy deals. Chinese firms like ENN Energy and Sinopec hold long-term US LNG contracts, but rising tariffs and trade restrictions could force renegotiations or cancellations. U.S. policies on vessel fees and port charges add to the uncertainty, risking supply disruptions for Chinese buyers. This situation could delay or cancel future U.S. LNG projects, making the energy market a tricky place for Chinese companies. Finally, on a brighter note, Hong Kong stocks are climbing. Investors are hopeful that U.S.-China trade tensions might ease, especially after President Trump hinted at possible tariff reductions. The Hang Seng Index rose nearly 2%, with tech giants like Alibaba and Kuaishou leading the charge. U.S. markets also responded positively, with the S&P 500 jumping over 2.5%. It looks like optimism is back in the air, and markets are feeling the good vibes. Please continue to watch for more detailed updates. South China Morning Post reports that the market for Chinese Keepwell bonds is facing a significant contraction, exacerbated by a protracted and contentious legal battle in Hong Kong. The recent court ruling, which awarded only nominal damages to offshore investors in Peking University Founder Group's bonds, has cast doubt on the effectiveness of Keepwell deeds in safeguarding investors' interests during defaults. The case revealed that the legal framework surrounding these bonds remains uncertain, with unresolved issues about their structural subordination risks. As a result, the issuance of Keepwell bonds has plummeted from about $30 billion in 2017 to roughly $7 billion in 2024, with most future issues likely to come from state-owned firms deemed less risky. Industry experts warn that the legal ambiguities and the court's inability to definitively affirm the bond's protective qualities will continue to hinder market growth, forcing investors to exercise greater caution. Meanwhile, South China Morning Post highlights the geopolitical and logistical challenges faced by Chinese energy companies amid the ongoing US-China trade tensions. S&P Global analysts warn that long-term LNG contracts with U.S. providers could be at risk if tariffs and trade restrictions persist. Chinese firms, which currently hold over 21 long-term U.S. LNG procurement contracts, may need to renegotiate or even cancel these agreements if tariffs escalate or if U.S. policies impose additional port fees and vessel restrictions. The U.S.'s recent move to impose port fees on Chinese vessels and to mandate a minimum percentage of LNG exports transported by U.S.-built ships adds further uncertainty, especially for Chinese companies with high U.S. LNG exposure like ENN Energy and China Gas Holdings. The potential delays and increased costs threaten to disrupt the expansion plans of U.S. LNG projects, casting a shadow over future energy supply strategies in China. Lastly, Nikkei Asia reports that Highlands Coffee, Vietnam's largest coffee chain, is reigniting its plans for an initial public offering, with a focus on listing in Vietnam to honor its roots. Despite exploring options in Singapore, Hong Kong, Abu Dhabi, and the US, the company's founder and CEO, David Tai, emphasizes Vietnam's importance and the desire to connect with local investors. The move follows Indonesia's successful IPO of 4 Coffee, which saw shares surge 34% on debut, signaling strong investor appetite in the region's coffee sector. Highlands Coffee, owned primarily by Jollibee Foods, has expanded rapidly since its 1999 inception and now operates over 850 stores, contributing significantly to Vietnam's growing coffee market projected to reach over $800 million by 2030. The company's renewed IPO ambitions are complemented by recent industry consolidation, such as Golden Gate's acquisition of the coffee house, and a rising wave of local and tech-enabled startups, indicating a vibrant and competitive landscape poised for further growth. Nikkei Asia reports that China's leading tech giants, ByteDance, Alibaba, and Tencent, have been aggressively stockpiling billions of dollars worth of NVIDIA's AI chips, particularly the H20 GPUs, in anticipation of US export restrictions. These companies, aware of the impending curbs announced in April, ordered nearly 1 million units collectively, with a value exceeding $12 billion, to secure their AI infrastructure ahead of the ban. Despite the U.S. government's move to restrict shipments, Chinese firms sought alternative methods, including purchasing chips outside China and establishing overseas subsidiaries, to maintain their AI development momentum. The H20 chips, optimized for inference tasks and less powerful than NVIDIA's flagship H100, remain vital for China's AI ambitions, especially as domestic alternatives like Huawei's Ascend are being scaled up to meet the demand for high-performance computing. The South China Morning Post highlights the escalating tensions between the U.S. and China, with Beijing's top office condemning U.S. tariffs and sanctions on Hong Kong, branding them as acts of despicable and shameless behavior that have only exposed American tyranny. The article underscores China's retaliatory sanctions against U.S. officials and lawmakers, framing these moves as justified responses to perceived U.S. interference and aggression in Hong Kong and broader geopolitical disputes. The commentary emphasizes China's preparedness for further confrontation, asserting that American efforts to destabilize Hong Kong and contain China will ultimately fail. This rhetoric reflects a broader narrative of resilience and defiance amid ongoing diplomatic and economic battles, with Chinese officials vowing that their countermeasures are strategic and inevitable. Meanwhile, the South China Morning Post reports that Hong Kong stocks surged on optimism that U.S.-China trade tensions might ease, buoyed by signals from President Donald Trump suggesting lower tariffs and a more conciliatory stance towards China. Alibaba and Kuaishou led the charge, with their shares climbing significantly amid hopes of reduced trade friction. The broader Asian markets also gained, reflecting investor confidence fueled by diplomatic hints and positive U.S. economic signals, such as the Federal Reserve's apparent pause on interest rate hikes. This market rally indicates a cautious optimism that the two economic giants may soon de-escalate their trade disputes, potentially paving the way for renewed cooperation and growth in the region. Reuters' Breaking Views paints a vivid picture of China's struggling property giants, with Sunak leading the charge towards a second offshore debt restructuring, signaling a shift in the industry's attitude. Once proud developers like Sunak are now being reduced to creditors' laborers, contemplating aggressive debt-to-equity swaps that could see bondholders gaining control, an unsettling yet perhaps inevitable move as the property slump persists. Sunak's plan to convert all its dollar debt into shares would massively dilute its existing stakeholders, echoing a similar strategy employed by CAISA, which has already secured approval to swap an enormous $13 billion of debt into new notes and bonds that could give bondholders a majority stake. These moves highlight a grim reality: creditors are increasingly reluctant to take on the risks of managing Chinese developers, yet with liquidation prospects bleak, especially after the protracted downfall of Evergrande, lenders are left with little choice but to accept these painful restructurings, hoping that Beijing's stimulus policies will revive home prices and sales, allowing these giants to survive before their debt matures and spirals further out of control. The South China Morning Post offers a stark critique of Hong Kong's so-called eco-recreation plan on Lantau Island, exposing a glaring disconnect between the project's name and its actual content. Despite the government's claims of promoting sustainability, the proposed corridor seems to prioritize infrastructure, buildings, piers, car parks, and even a chairlift, over ecological preservation or community integration. Birdwatching sites like Shuihao and Puyi-o, renowned for their avian diversity, are conspicuously absent from the plan, which appears more focused on boosting tourism through new facilities rather than protecting natural habitats. Environmental groups have voiced grave concerns about habitat destruction, pollution, and the overloading of existing transport infrastructure, yet their warnings seem to fall on deaf ears, as past grand visions for Lantau, ranging from theme parks to cable cars, have largely gone unrealized. Given Hong Kong's economic struggles and limited budget, the corridor remains a tentative idea, with its success hinging on whether it can balance tourism growth with genuine ecological conservation, or whether it will simply become another failed project that leaves South Lantau's environment further compromised. The South China Morning Post also delves into the delicate role of the Hong Kong Catholic Church amid shifting geopolitics, emphasizing its unique position as a bridge between the Vatican and mainland China. Following Pope Francis' death, there is cautious optimism that the Hong Kong diocese will continue to foster harmonious relations with Beijing, leveraging the warm rapport built by Cardinal Stephen Chow and other church leaders. Despite the absence of formal diplomatic ties, the Church's efforts, such as Chow's visits to mainland dioceses and his participation in high-profile events like the Pope's Mass in Mongolia, highlight its ongoing mission to facilitate dialogue. Experts suggest that the Vatican's approach under Francis has been increasingly conciliatory, aiming for a pragmatic relationship with China that balances religious interests with geopolitical realities. While the future Pope's stance remains uncertain, the Hong Kong Church's role as an intermediary is likely to persist, though analysts acknowledge that escalating US-China tensions and internal political shifts may limit its influence. Still, the Church's strategic position in this complex landscape underscores its importance as a conduit for religious and diplomatic exchanges, even as broader diplomatic relations remain fraught and unresolved. BBC reports that despite his vocal criticism of the Federal Reserve, President Donald Trump has publicly stated he has no intention of firing Chair Jerome Powell. This declaration comes amid a backdrop of escalating tensions, with Trump expressing a desire for more proactive interest rate cuts, even as the Fed has held steady since late last year. The president's comments follow a period of intense rhetoric, including calling Powell a major loser, which initially triggered a market sell-off. However, markets have since rebounded, with major indices like the S&P 500 and Nasdaq posting significant gains, reflecting cautious optimism about the economy and potential easing of trade tensions with China. Trump also hinted at a more amicable approach to negotiations with Beijing, suggesting tariffs might fall but not disappear entirely, as he aims to balance trade diplomacy with economic stability. South China Morning Post details a troubling incident at a McDonald's in Hong Kong, where a 16-year-old employee was caught on viral footage bullying and spitting on a female colleague. The video, which surfaced in December and went viral in January, shows the young worker shouting and repeatedly spitting on the 19-year-old woman, with other staff present but passive. The police arrested the teenager on charges of common assault, and McDonald's responded swiftly by suspending him and launching an internal investigation. The company reaffirmed its zero-tolerance policy on bullying and committed to enhancing disciplinary measures to ensure a safe working environment, demonstrating a firm stance on workplace misconduct amidst growing awareness of employee safety issues. The South China Morning Post also reports on the decline of retail in Hong Kong, exemplified by the closure of Prince Jewellery and Watches flagship store on Russell Street after 21 years. The decision was driven by a dramatic rent hike from 1.1 million Hong Kong dollars to around 2 million Hong Kong dollars per month, imposed by landlord Cloverland Investment, linked to a prominent local family. This sharp increase, coupled with the ongoing retail slump caused by social unrest and the pandemic, has forced many high-end brands like Burberry and Kiehl's to leave Causeway Bay, replaced by more affordable tenants such as pharmacies and phone accessory shops. Overall retail rents have plummeted by nearly 40% since 2019, with luxury brands retreating and the retail landscape shifting towards mass-market tenants, reflecting a city struggling to recover economically and maintain its retail vibrancy. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.
Turn on the screen, monster screaming. Empty smiles, their words misleading. Power games and